Hey everyone, Eric Dutram here with the latest edition of the Dutram Report, the podcast on ETFs and more. Today we have with us Jamie Anderson, the managing principal of Tierra Funds. We talk about REITs, Latin America, and their Tierra XP Latin America Real Estate ETF, ticker symbol LARE. So stay tuned for that right after this. Jamie, thanks for joining us.
Thanks, Eric. It's great to be here.
And, we actually wanted to talk to you a little bit about the REIT market, in particular, what's been going on in 2016. It's been a pretty good start to the year for real estate investment trusts. What was behind the nice performance to start the year, at least?
Thanks, Eric. Yeah, so essentially REITs are kind of fixed income-like instruments. So I would say it's not really just this year. It's over the last 2 or 3 years we've seen REIT prices appreciating tremendously. And that's basically been in parallel with the rise of bond prices. We think that most of that is driven by investor demand for attractive yield. And when yields go down, prices go up. And one thing I would note is over the last 2 months, especially over the last month, we've seen an inflection point crossed in terms of flows out of U.S. REITs. And so, interestingly enough, it's been a very strong asset class for the last 2 to 3 years, but we're seeing a material shift in investment flows coming out of the space now, actually.
Yeah, definitely. I've seen a little bit of a sell-off in a lot of the popular REIT ETFs out there. Do you think that's primarily due to speculation about the Fed raising rates at the end of the year?
Yeah, I just think that when you've seen the kind of run we've seen in U.S. yield, and the expectation that, we're getting closer to another rate hike, as well as, frankly, real yields are starting to back up a bit, right? The 10-year is now at 1.72 or something like that. 3-4 months ago, it was below 1.5. So I think, this is a normal part of the asset cycle. REITs have been tremendous beneficiaries of investment capital coming in, but, valuations are probably at or near historic highs, and investors are simply taking some chips off the table, as they should.
Yeah, definitely. It's been a great run, but hey, everything's going to come to an end eventually. One thing I did want to ask you is sometimes I hear people say that people have enough real estate exposure via their homes, and that holding real estate assets in a portfolio is kind of overkill. What do you say to people who say something like that?
Well, there's an argument for that, but I think that, listed real estate vehicles, and REITs in particular, it's fundamentally different from your home equity for a number of different reasons. First off, it's liquid, right? You can sell it. Number two, it pays a current dividend yield. You don't get that from your house. And number three, it's got appreciation potential in the near term, right? Obviously, you've got downside potential as well, but fundamentally, I would say from an investment standpoint, two very different animals.
Yeah. And you know what? I was thinking maybe we could switch gears a little bit and sort of talk about your specific focus, which is real estate investment trust in Latin America, with the Tierra XP Latin America Real Estate ETF, symbol LARE. Maybe you could tell us, why Latin America? Why that particular region of the globe?
Sure. And it's great to be on here talking about the LARE ETF. We listed it last December. Our background is actually, goes back about 20 years in the region, working in real estate, private equity. And we saw an opportunity last year when asset values really started to bottom. And our experience tells us that, when asset prices get to certain levels, deeply discounted levels, it's a very attractive asset class to move capital into. So we did a lot of research on the index, and we wanted to approach the asset class from a regional standpoint as opposed to a country-specific standpoint, because our experience is that if you are spread out over different economies, you have a built-in hedge as it relates to currencies as well as changes in economic events, etc. And so you end up with an exposure that is, number one, more diversified, but number two, less volatile. And we're happy to report that, our timing seems to have been quite prescient. The LARE ETF is up just about 33% year to date and paid out already north of a 4% annualized dividend yield. It's a monthly dividend paying product. And the index is showing a 5.5% forward dividend yield. So we feel very good about the product performance year to date. And just stepping back a bit, I mentioned that U.S. REITs have been quite popular for, desire for yield, appreciation, et cetera. But, also, U.S. REITs, as I mentioned, have sort of gotten to these, very high valuations. And one of the things we saw at the end of last year when comparing Latin America real estate and REITs specifically to their counterparts in the U.S. is, the valuation discounts were so let me put it in perspective. U.S. REITs are trading about 30 to 40 times trailing earnings. Now, that metric may or may not make sense in the REIT world, but it's an historic high multiple, right? Mexican and Brazilian REITs are trading between 12 and 14, 15 times, right? There's a very big difference between the valuation of REITs in Latin America and REITs in the U.S.
Sure.
And, globally, that kind of makes some sense, right? Because emerging markets were sold really hard over the last few years. So our primary impetus in pushing this product out, launching the product in December, was really to provide investors with a vehicle to access real estate that's very attractively priced and pays a very attractive dividend, as well as growth potential, which we've obviously realized an interesting appreciation year to date, which we foresee continuing.
Yeah, and are you seeing the same trends in other areas of the Latin American market, or do you think this is primarily a real estate issue, more of a valuation play just for real estate as opposed to, some of the other areas out there? I know there's a bunch of other Latin America funds, in the space. So I guess what do you think sets apart real estate as opposed to, say, a broad play or a consumer-focused one?
There are. You're absolutely right. And, Mexico is kind of a standout in the region this year because it hasn't really performed, right? I'd say that Mexico is closely tied to the U.S. economy now, and it's a solid long-term investment destination, but it just doesn't have the same kind of volatility that you see in Brazil, Argentina, Colombia, Peru, et cetera. Colombia, Peru, Argentina, obviously Brazil. I think Brazil is still the number one country year to date in terms of returns. So we've seen stellar returns across the asset spectrum in South America this year. And that was a natural, I think, occurrence given the severity of the sell-off since the commodity super cycle, quote unquote, burst a few years ago, right? I mean, you saw countries that were dependent upon commodity exports just getting slammed. Our view was that you had a fundamental sell-off, but you had more of a currency sell-off, and we felt that given the role of the extreme sell-off in currencies, we were going to see a pretty quick snapback. And we've seen that, right? I mean, the Brazil benchmark is up, 69%, 70% year to date. Colombia, I think, is up something like 50%. Peru has really rocketed. Argentina as well. So we've seen a massive snapback. Now, here's what we think is going to distinguish real estate. And by the way, I'll tell you, the LARE ETF is about 44, 45% Brazil, 43%, 44% Mexico, and then there's some Chile and Argentina in there. So it's obviously very impacted by the stellar performance in Brazil this year. But that said, the average Brazil real estate component is up somewhere like 80 to 85% year to date. So it's actually outperformed the Brazil benchmark. Obviously the overall product, a component of that is Brazil, so it's not up 85%. But what we think is going to distinguish real estate going forward, and this circles back to another reason why we think, the LARE ETF is so unique for not just real estate exposure, but EM exposure overall, is volatility is inherently lower in real estate, right? Just like volatility associated with fixed income is less than volatility associated with equities, right? When you've got a more predictable income stream, those asset prices just generally don't react the same way from one day to the next the way that equities do, okay? And so this inherent lower volatility associated with real estate, especially REITs, is one of the primary attractions of the LARE ETF. So I'll give you an example. Realized volatility year to date in the Brazil benchmark is something close to like 50%, right? Now, you're up almost 70%, so it's been worth taking that risk. But if you've been along on the ride this year with the Brazil ETF, you've had days where you were up 3%, but you've had days where you're down 3 or 4%, right? So that volatility when the market's moving in your favor is wonderful. When it's not, your drawdowns or your down days can be really severe. They can be quite painful. The LARE ETF actually has realized volatility that is less than half of Brazil volatility. And what that means is the daily changes are not going to be as severe. Now, you're not going to make as much money when things are going up, but you're not going to get smacked as hard when the broader markets are selling off on down days. And we think now that we've seen a large part of this currency mean reversion since currencies in emerging markets were so oversold. And we've seen a lot of that mean reversion trade kind of work. It's snapped back. We think fundamentals and volatility are going to really matter going forward, right?
Yeah, so it's kind of a low volatility way to play what is traditionally a high volatility region of the globe, at least for investment purposes.
That's right. And as we shift into a longer term focus, which is the appropriate shift at this point, by the way, with regards to emerging markets, you want to start to distinguish a little bit more between quality and momentum. You want to focus probably a little more on yield because we're still going to be lower for longer. And you want to be in something that is less correlated. And that's the last feature of the LARE ETF that is very unique. I mean, it's only 0.49, so it's about 49% correlated to the S&P 500. So to put that into perspective, out of the universe of almost 200 listed real estate mutual funds and real estate ETFs in the United States, okay, it's about $200 billion of assets under management. Their correlation to the S&P on average is between 90 and 110%. If you think, excuse me, I'm talking about beta. The correlation is around 90% to the S&P, which is a pretty high correlation if you think about it, right?
Yeah, definitely.
So when we talk about, Latin America real estate, there's going to be a benefit there associated with the medium-term trend of improving economic conditions. But secondly, it's a strategic and tactical shift that an investor can make within a global real estate portfolio to overlay some attractive yield as well as some growth potential there.
Yeah, and you briefly talked about Brazil and how they're having a pretty great year. I think that's probably a shock to most people in the U.S., just because we never really hear any good news coming out of Brazil lately. What do you think is really driving this solid performance? I mean, obviously the commodities are helping, but do you think something about the political situation is also, moving forward in the right direction?
Yeah, it's been a roller coaster, right? I mean, Brazil is coming out of a 3-year, very deep recession, the worst recession they've had since 2003, which was a bad recession. The currency was extremely oversold. And as you know, Brazil was especially hard hit by the commodity sell-off. But what's happening in Brazil is much more on the political front, which is deeply intertwined with the economy because the government is so involved in so many aspects of the economy. So basically, back in December, we had the first real indication that Dilma Rousseff, the former president, was in fact going to be targeted for anti-corruption. As we know now, she went through that impeachment process. She was impeached and then ultimately removed from office. What we've also seen in conjunction with not just the president being removed, but we've seen a broad range of private sector and public sector officials get pulled into this probe, indicted, and sent to jail. So Brazil's going through a cultural phenomenon right now where the country itself is rooting out corruption. Okay? I don't think it's fair to assert that Brazil is never going to experience corruption, okay, anymore. I mean, that's not realistic. But what they're doing, and this is what's unique about the period, there's a cultural shift in terms of the attitude towards it. So that's very constructive for business and business investment especially. Secondly, since Dilma Rousseff was removed from office, we've seen an entire new cabinet come in, very pro-business, and just this week they are preparing to vote on fundamental fiscal reform, for example, like capping retiree benefits, state employee retiree benefits, which is a major overhang with the government's budget. Secondly, we're seeing very, very constructive macroeconomic data. So what investors are really now looking at, which is why you've seen a continuation of the rally, okay, is the central bank communicating a time when they feel that they can begin to cut interest rates. So the overnight interest rate right now, the equivalent of the Fed funds rate in Brazil, is about 14.25%, right? Can you imagine Janet Yellen sitting on a 14.25% Fed funds rate?
Yeah, it's impossible to imagine.
They'd be having cocktail parties every night. I mean, so many options are on the table when you've got very high interest rates. And that's precisely where Brazil is right now. What the central bank needs to see is a trending lower inflation rate. And they just got it today, by the way. The month-on-month inflation rate dropped through the floor, and the annualized trailing 12 inflation rate dropped 50 basis points month-on-month. That's a very big drop. So everybody is expecting the central bank to be able to begin cutting interest rates perhaps as soon as the end of this month. And that could be 25 basis points, could be 50 basis points. And that's an important feature of, frankly, any investment, but certainly an investment in real estate in Brazil, because if they're cutting interest rates, that is necessarily going to likely increase, right? It's going to be the opposite impact. I mean, over the last 2 weeks, we've seen some pretty big U.S. real estate ETFs, like the XLRE, it's down almost 10%, right? The VNQ, which is kind of like a global product even, that's down 9%, right? And that's specifically in response to the expectation that the Fed's going to increase interest rates. So in Brazil, it's the opposite. We're actually going to see a follow-through on asset appreciation because the central bank is going to start cutting interest rates. And we could frankly see 200 to 300 basis points of rate cuts over the next 18 months in Brazil.
Yeah.
That's going to be a very big tailwind for asset prices and especially REITs.
Yeah, it could be like a similar situation to what we saw here in the U.S. as rates were falling as a strong period for real estate investment trusts. But I did want to ask you, so how might your product fit into investors' portfolio? Do you view it as a substitution for lack of a better word, a traditional REIT exposure, or do you think it's more of like a complement?
I think it's either one. I think somebody who has an existing allocation to U.S. REITs, for example, can smartly overlay or add the LARE ETF to their portfolio. They're going to introduce an attractive dividend yield, but also they're going to enhance their ability or improve their possibility of experiencing some follow-through on the appreciation side. So from that vantage point, if you've already got an existing allocation, it's a great way to avoid taking cap gains today, but also holding on, increasing your yield and growth potential. To the emerging markets investor, we believe that real estate is actually a proxy. I mean, you can invest in real estate and experience a lot of the same appreciation over time and arguably a better dividend yield, right? So investors love to see their statements go up month to month. But one of the things that investors, I think, generally overlook is volatility, right? And so if you're in something that has high volatility, as I said earlier, if it's going up and working in your favor, that's terrific. But when it's not, it can be painful. Secondly, I would say, in the case of Latin America, because the recession was so severe in Brazil and some other places, dividends were cut, right? So 3-4 years ago, if you owned, Petrobras, you were getting a really sweet dividend. Well, those dividends have been suspended. And so you're going to see that reflected in widely held products like the EWZ, right? So EWZ's done great year to date, but EWZ also used to yield like over 4%. I think the EWZ right now is projected to yield under 1.7 or 1.8% going forward. So you've done well year to date, but you got to question how much do you want appreciation over current income? And that's where I think the LARE ETF gets really interesting, is for somebody who says, I want Latin America exposure. And we really think that the LARE ETF is a proxy in that regard, because the volatility with the LARE ETF is actually less than the EEM, and it's less than Mexico, substantially less than Mexico. So there's a number of ways to play the LARE ETF. And lastly, I would say to somebody who is a more conservative investor, but they still like that emerging market yield, they might own EMB, for example, which has done as well, very well over the last year. Obviously less risky, but pays a great yield. Adding LARE ETF to an EMB exposure, for example, is a nice way to complement, a fixed income portfolio with a fixed income-like yield associated with REITs.
Definitely. Well, yeah, I think this is pretty interesting. We definitely learned a lot about Brazil, Mexico, what's going on in the real estate market. I did just want to ask: is there anything on the horizon from Tierra? Are you guys thinking about launching any other products in the near term?
We are. We're working on a couple of different themes. Our focus is primarily Americas, but with an eye on strategies that will speak to local institutional investors in Latin America, like local pension funds, as well as global pension funds and retail investors in Latin America, but also in the U.S. So, one theme that we pay a lot of attention to, for example, are companies that derive a substantial portion of their revenues from exports, and particularly exports within the region. And we're working on some very interesting strategies in that space. The other space that we are spending more time on involves local mutual funds in the space, which we think there's some interesting opportunities there. There's this leapfrog concept that you guys may have heard of in connection with how emerging markets develop. And I remember when I first went to Mexico City in 1992, the number of people who had telephone lines into their house, it was like 50% of the population didn't have a phone line in their house. I mean, it was a crazy high number. And yet at the same time, you saw cell phone technology being rolled out, right? And like 10 years later, like everybody had a cell phone, right? And they may have never had a landline into their house, for example, whereas in the U.S., that evolution took 50 years. But we see the same thing happening on the financial product side. So 5 years ago, you didn't have online discount retail brokers in Mexico, for example. Well, now you've got a big industry built around individuals who trade through discount brokerages online in Mexico. And so we fully expect that the ETF vehicle is, even though it's a small part of the overall asset allocation in Latin America, we think that the adoption rate for the ETF product is going to experience something like this leapfrog effect as well, much the same way that other technologies and services have in the region as well.
Yeah, definitely. That sounds pretty interesting. Never really thought about that aspect of the Mexican market. We'll definitely be on the lookout for that in the future. All right, Jamie Anderson, thank you very much for joining us. I think this was great. And best of luck with LARE in the future.
Thanks very much, Eric. Appreciate the opportunity.
All right, everyone. That was Jamie Anderson, the managing principal of Tierra Funds. Their ETF, the Tierra XP Latin America Real Estate ETF, trades under the symbol LARE. So look out for that if you're in the market for a new type of REIT fund. Well, hope you enjoyed this edition of the Dutram Report, and make sure to tune in for more interviews and discussions on the world of exchange-traded funds in the future. For Zacks.com, I'm Eric Dutram.